Welcome to the Fear and Greed Weekend Edition, the week that was, a wrap of the biggest stories over the past 7 days. I'm Sean Aylmer. Life seemed a bit more normal this week. Everyone was back at work, kids were back at school, and markets, economics and politics, not COVID-19, dominated the news agenda. Let's start with politics. The week began with Prime Minister Scott Morrison saying the era of big spending to combat COVID-19 was over. JobKeeper payments would finish at the end of next month. Some sectors, notably tourism, will still receive some payments, but Mr Morrison wants things to get back to more normal settings. His priority is rolling out the vaccine for COVID-19, and he wants to grow the economy and jobs. It was almost like normal. Scott Morrison is a good politician who can sniff a photo opportunity from miles away. Mind you, all the best politicians can do that, but this week was particularly good for the PM. He spoke to US President Joe Biden for the first time since his inauguration. They discussed the Australia-US alliance, our role in the region, China's strategic plans, whatever they are, and climate change. There was plenty of agreement, though when it comes to the environment, Mr Biden is much more proactive. Our PM still hasn't committed to setting greenhouse gas emission reduction targets, but his language has changed in recent weeks, and definitely he's softening to the idea. On the coronavirus front, the vaccine rollout got plenty of coverage. Australia did manage to secure 10 million extra doses of the Pfizer-BioNTech jab. That's the only one so far approved by the local regulator, to go along with the 100 million doses of the Novavax and AstraZeneca antidotes. Mr Morrison said all Australians would have the opportunity to receive a vaccine by the end of the year. There was one new community-transmitted case of COVID-19 during the week, a worker in the Perth hotel quarantine system. That state, or at least Perth, went into lockdown for 5 days, and there hasn't been a case since. Perhaps a case of using a sledgehammer to kill a fly. There's been plenty of activity around the social media giants this week. The PM had a chat with the boss of Alphabet, the owner of Google, about Australia's proposed code of conduct that would force Google and Facebook to pay local news media companies for their content. Google has threatened to withdraw from Australia if it goes ahead. Apparently, the discussions were fruitful, but it seems the two sides remain some way apart. The Federal Treasurer, Josh Frydenberg, and Minister for Communications, Paul Fletcher, held talks with Facebook's Mark Zuckerberg about the code. Mr Frydenberg said he hadn't been convinced to back down. And the head of Microsoft had a chat to the PM, saying he thought the code was reasonable and offered to expand its search engine, Bing, in Australia if Google pulls out. Turns out the code doesn't actually apply to Microsoft. Plenty more on this story to come. It was a mixed week for local corporates. Telstra said it would sack 1,400 workers as it recommences restructuring its operations. The program had been put on hold at the beginning of the pandemic. It signalled that business is getting back to normal. Tabcorp said it had received a takeover offer, apparently from a London-based gaming company. It emerged during the week that a private equity group was also interested. Its share price jumped as a result. BlueScope Steel said its first half earnings would be above previous guidance as demand and prices in Australia rose and its operations in the United States rebounded. Packaging group Amcor said its first half profit had jumped 65%, but Australia's two biggest energy companies, AGL and Origin Energy, warned earnings would be hard hit by low electricity prices, greater competition in coal-fired power generation — remember the federal government said it might even build a plant — and renewable energy contracts signed decades ago that were now unprofitable. Sleep apnea group ResMed said the shift to out-of-hospital care would help its sales, particularly in the United States. Engineering group Worley said its earnings had been hit by slower economic conditions, and retailers Temple & Webster and Nick Scali both said profits had surged last half. But there remains questions about future growth and their ability to fulfill orders given the slowdown in manufacturing and logistics as a result of COVID-19. It was a massive week for financial markets, with Wall Street surging to close to record levels. The rollout of the vaccine in the US, more than 40 million people have already received a dose, an economic stimulus package in the offing is driving the increase. Also, Wall Street companies are reporting much better third quarter profits than expected. 80%, 4 in 5, 80% of companies are beating estimates. The tech stocks have led the way, and Australia's Atlassian, which is listed on the Nasdaq and worth around $74 billion, was among the strong performers. European markets were also higher, though there's not quite the excitement across that region. The rollout of a vaccine and economic recovery is somewhat behind the US. The local market had a topsy-turvy week. There's a real change in risk appetite at the moment. Some assets, such as gold and bonds, are losing favour. That's triggering share price losses among some miners, real estate investment trusts, and infrastructure companies. The big three miners, BHP, Rio Tinto and Fortescue, are suffering from lower iron ore prices. But silver miners did well as the price of the metal rose, spurred on by scuttlebutt on investor bulletin boards in the US. The banks are doing better, and many cyclical stocks that rely on economic growth are coming back into favour. The oil and gas companies have benefited from higher prices for those commodities. Not sure why I even mentioned the Aussie dollar this week, did nothing. In global news, Britain said it would formally apply to join the Trans-Pacific Trading Bloc of 11 countries, which includes Australia, Canada, Japan, Malaysia, Mexico, New Zealand and Vietnam. China launched a carbon trading scheme as it tries to reduce emissions. China is the world's biggest polluter, and the program will be the world's largest emissions trading scheme. Amazon chief executive Jeff Bezos said he'll step down later this year after nearly 30 years in the job. Mr. Bezos created Amazon as an online bookstore and turned it into a behemoth that sold $125 billion worth of products globally last quarter. McKinsey & Co., one of the world's blue-chip consultants, has agreed to pay $573 million to settle investigations into its role helping turbocharge opioid sales in the US. And Italy has a new Prime Minister after Mario Draghi, the former president of the European Central Bank, accepted a request to form a national unity government. He'll be the country's 10th Prime Minister in just 20 years. Now I get to the point where I go through the biggest story of the week, the sleeper story, the most remarkable story and my favourite story. The biggest news story of the week was the economy. Things kicked off on Tuesday when the Reserve Bank Board met and decided to keep the official cash rate at its current all-time low level, and the central bank said it would spend another $100 billion buying federal and state government bonds. That effectively anchors interest rates. Governor Philip Lowe agreed the economy was improving, but clearly he's not confident that all is okay. He's pleased unemployment is down to 6.6%, but it will take time to get much lower. In fact, the economy won't be back to pre-pandemic levels until the middle of the year, Dr. Lowe said, and his best guess is that interest rates will stay low for another 3 years. No sooner had he made the comments than economic releases showed that the economy was picking up. Job ads were up for the 8th consecutive month, new finance commitments and house prices rose, and our trade surplus increased. The governor also strayed into the debate about whether unemployment benefits were high enough to sustain recipients. He said no. Dr. Lowe, who grew up in a middle-income family in Wagga Wagga near the New South Wales-Victoria border, said that they should rise, not for macroeconomic reasons, but for fairness reasons. The sleeper story of the week was about bond yields. Not the sleepiest, but the sleeper story. Bond yields are pretty cool. They're great predictors of what's going to happen in the economy, particularly around price rises. Investors buy bonds because they're safe, and the relatively low returns are worth it given the economic outlook. They're also a proxy for inflation expectations. Investors don't buy bonds which provide a fixed rate of interest if they think inflation is going to eat away at returns. For most of 2020, bond yields were very low. Investors demanded them and pushed up their price, thereby lowering yields. But now, investors want risk. Bonds are in less demand, so yields are starting to rise. 10-year bond yields are at levels not seen for 10 months. It means investors are betting the economy is on the rise and prices will lift. And that's actually good news for wages. That's why it's my sleeper story of the week. The most remarkable story goes to the Australian housing market. It just keeps getting stronger with record new building approvals during December and a rush of first home buyers in the market. House prices are up across the country, with the exception of Melbourne, and regions are doing best. RBA Governor Philip Lowe did, however, put a sense of levity into the debate when he said average prices were what they were 4 years ago. Fair enough, but there are still some remarkably strong pockets around the country. My favourite story this week involves General Motors. Maybe it's as I get older I get greener. Maybe Joe Biden's rubbing off on me. But I love the fact that GM in Detroit said it will phase out petrol-powered cars and trucks and only sell vehicles that have zero tailpipe emissions by 2035. It's one of the most significant environmental commitments made by a large automaker. Good on them. Special mention in this category to the Bureau of Statistics figures that showed record net migration to regional areas of Australia. People are even moving to, rather than from, Western Australia. That's the week that was for Fear and Greed. I hope you enjoyed it. I'm Sean Aylmer. Have a great day.